$10 billion in revenue during the calendar year, so the last 12 months. Praveen told me that in 2004, we crossed $1 billion in revenue, and then $2 billion in 2006, right, Ranga and Praveen? And when I started, I remember we were just above 8 billion. So that 10 billion number is something that all Infocions and all our stakeholders and clients should celebrate. We had good performance in Q3, considering that when we entered Q3, we were facing both the traditional seasonal headwinds from less number of working days and furloughs, as well as the one-time impact that we had expected from RBS despite that, and we had 1%, a little bit more than 1% impact from RBS. Despite that, we delivered Q3 revenues of just a little bit below flat, minus 0.3% in constant currency. We improved our margin performance thanks to the efforts of our teams, especially Ranga, which I am very proud of, and to deliver operating margin of 25.1%. Utilization was at 81.9%. That is the highest Q3 utilization in many years, and consistently now for the 7th quarter in a row, utilization above 80%. And then in the new areas, we had strong growth. All 4 of our new dimensions in software-led services, Mana, Skava, Panaya, and Edge, had their best quarters ever. And Mana client adoption has continued to double quarter on quarter. So we are seeing good growth on all fronts. As we enter Q4, we are optimistic about Q4. We have raised our guidance on constant currency terms to 8.4 to 8.8% for the year, based on the outlook that we see presently. One significant thing that we saw in this quarter was the continued pricing pressure. RPP, the revenue productivity per employee, declined 1.1% on constant currency quarter on quarter, 1.7% for the first 9 months of the year, and 3.3% year on year for Q3, which tells us that this downward steady pricing pressure is something that is here to stay, and it's a reality for our industry, as I have been saying for the last 2.5 years. And despite that, our revenue per employee at the company level went up to $51,900. This is a result of a strong focus on automation, strong focus on operational efficiency, led by Ravi and his team, as well as a agility in our hiring and how we have managed that. Overall, I'm happy with the performance for the first 9 months of the year, despite the seasonal circumstances that we have seen. So we did on year-on-year basis for the first 9 months of the year, that is 9.4% improvement on constant currency. So that is something that I'm excited about. And over the course of the quarter, we also saw that our customer satisfaction has increased significantly. In fact, the customer satisfaction scores are at the highest level ever since we started the customer satisfaction survey 12 years ago. So that is something that all our employees are proud of, and it reflects our endeavor to execute on our strategy to bring innovation into every dimension of our operations, to make innovation a way of life for everyone inside Infosys. Strong adoption of zero distance, and zero distance itself has become quite a significant movement, part of all dimensions of our company, both from a revenue driving perspective as well as just elevating the confidence, the creative confidence of our employees. As I look to the future, an increasingly AI-led future, this embrace of AI in improving our operational efficiency and automation, as well as new AI-led solutions for all industries, is something that is going to be crucial to our future. And that is going to require the best of the imagination of all of us, and that is something that I'm glad to see the markers of progress on all of these fronts.
Good morning, gentlemen, and Happy New Year. Vishal, just to get your thoughts on, you just conducted a survey of all your clients. What is the kind of client behavior changes that you have seen post Trump's victory, and do you see that that's going to impact the Indian IT companies and companies like you who are working extensively in the US? And for Ranga, the margins have gone up by 2 basis points. Can you give us a idea of, is there further scope for expansion of margin as we go forward? And since Vishal was talking about RPC going down by 1%, what are the levers available at your hand to ensure that you are able to stem that fall in RPC, because that's going to be a critical factor going forward, and impact of cross currency changes, which is there.
So in terms of the new administration, the new president is going to take office next week, and overall I expect that President-elect Trump is himself an entrepreneur and a very business-friendly, innovation-oriented, has an innovation-oriented background. So I expect that the policies of the administration are going to be friendly towards business and innovation and entrepreneurship. So overall, I expect that if we can continue to focus on delivering that value, that innovation, things will be okay. Of course, visa policies and immigration-related policies may change, and we have to watch and see what happens there. So far, there is no discernible pattern in client behavior. Many clients have reached out because everybody is trying to figure out what these things mean and so forth. And but I wouldn't say that there is any noticeable discernible pattern. So as we see the policies take effect and so forth, of course, we will let you know. We are what is it called? We are waiting and
watchful mode.
Watchful mode. Yeah, we are waiting and watching.
Hi, on the margin front, this has been a positive quarter. If you look at the operating margin, it expanded to 25.1, which is the highest in this year. Likewise, the net margin also expanded by 60 basis points to 21.5. So I think overall on the margin front, if you look at the 9 months over 9 months, this year it was 24.7. Pretty much same as last year's, despite the lower revenue growth. I think on the margin front, as you were saying, well, yes, even in this 9 months, if you look at year on year, the pricing decline was 1.7% in constant currency. So despite that, we are able to kind of maintain the margin at the same level as last year. In October, we clearly said that our operating margin range for this year would be 24 to 25. So we're pretty much at the higher end of that particular band as of now. So coming to the levers that you talked about, we have multiple levers that we have kind of continuously utilized over the last 7 quarters. For example, utilization consistently above 80%. This quarter also, despite the RBS headwinds, typically, it brings down the utilization lower in a seasonally soft quarter. So we've been able to keep a healthy utilization. Then if you look at the on-site employee cost as a percentage of revenue has come down this quarter. Likewise, on subcontractor costs, we have stabilized around 5.4, 5.6 range. Likewise, these are particular levers that we have utilized in the past, and we continue to optimize those levers. At the same time, there is one more lever which has not improved much, which is the on-site mix, which is still at 29.8, and we do believe that we need to work on it, and we will work on improving that lever as well. So overall, in spite of the pricing decline of 1.7% in constant currency over 9 months, we have been able to keep the margin, and the margin has expanded this quarter. And most importantly, the operating cash flow has been very healthy. It is at 100% of the net profit.
Happy New Year, gentlemen. Rupuni Rao from CNBC TV 18. Vishal, want to understand from you in terms of the noise around H-1B visa. How big a headache is that for Infosys at this point in time? And also, you've crossed the 10 billion mark run rate. So, in terms of your aspirational 2020 goal, do you think that this is making it look much achievable at this point in time? And also, Praveen, just want to understand from you the next growth wave. Where is that coming from, given the fact that most of your businesses and also services, they're either doing flat or marginally well? And Ranga, also in terms of the current